And I would challenge you to find a company that's innovating at a faster, more audacious rate than Elon Musk's company.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. In this video, we're watching some clips from one of Wall Street's most influential Tesla stock analysts, sharing what he thinks about Tesla's stock price, their market capitalization, their total addressable market, how his firm is actually analyzing the stock, and a hilarious moment of brutal honesty. So let's get into the video. But first, hey guys, if you're in the US and you'd like to help out the channel and get a free stock, check out the link in the description to WeBull. If you open a new account and fund it with $100, you'll get a free stock valued up to $1,600. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
Adam, you've got this price target of $272 a share, certainly one of the bearish ones on the market. You've had an equal weight rating, though, on the stocks. So help me square the two here. A pretty bearish call with $272 a share, but still an equal weight.
Yeah, I mean, the range of outcomes for Tesla is very wide. We're kind of gasping for breath as, frankly, the retail investors got this right.
Adam, Jonas, take a bow for that honesty. I totally agree. Us retail investors seem to notice something that the Wall Street analysts missed completely and entirely. I've been ranting and raving about this now for 10, 11 months on this channel. I've even lost track of time. I've been going crazy, going, hey, Wall Street has no idea what they're looking at. They have no idea about Tesla. This is what they don't understand. He's nailed it. At least this is awareness. And good on Adam for actually mentioning this. I mean, honestly, credit where it's due. What other analysts on Wall Street will come out and say, you know what, we got it wrong and the retail investors got it right?
I think the long-term software, internet, tech-oriented investor that is comping this company versus a range of other 25 or 30 or 40 or 50% CAGR companies, that's the lens to use.
This is music to my massive ears. And again, credit where it's due, at least Jonas now has this recognition and awareness. How many times have you guys heard me say in the past on this channel, the lens through which Wall Street analysts are looking at Tesla is not serving them. They think they're a car company. They're not. They're a tech company. They make batteries, they make software, etc. They happen to put both of those into most of their current products. So these comments regarding Tesla stock from Jonas are actually incredibly important. As I said earlier, Jonas carries a lot of influence and weight in the analyst world. So once he's starting to go, hang on guys, we got it wrong. It's not about cars. It's about tech. The retail investors were right. Many other analysts will listen because it's a lot easier than just thinking independently and drawing your own conclusions, because if they had have done that, they probably wouldn't have been thinking they're a car company in the first place. Let's be honest.
And we need to see, in order to get our target substantially above where we are today, we have to keep working with I kind of need to be a community organizer and keep working with our battery people, our tech and internet experts to stay ahead of the curve. And it does take industrial kind of crusty folks like myself out of their comfort zone.
I mean, come on, massive respect once again to Adam Jonas for the brutal honesty. What other analysts would actually admit this? Now, those of you who are familiar with ARK Invest will actually know they've been preaching for years now. We analyze stocks differently. We have a team of different experts from different industries looking at these disruptive technologies. Is it any wonder ARK's funds have absolutely destroyed market returns and absolutely destroyed pretty much every other managed fund in the last couple of years? It's no surprise because they've understood how to look at Tesla, the opportunity. Jonas is finally starting to grasp this. Oh yes, now I'm a community manager. I've got to manage this person looking at battery tech, this person understanding software. This is a really good step in the right direction. Unfortunately, most Wall Street analysts still have no idea what they're looking at, still don't even know how to look at the Tesla opportunity. But I think things are going to change. Now, this is good or bad depending on whether you've bought enough Tesla stock or you're still buying. To be perfectly honest, I would much rather the analysts still to be out there saying, it doesn't make sense, Toyota makes more, I don't get it, the valuation's too much. I'd much rather the analysts be doing that and scaring retail investors away from the stock so I can keep buying while it's cheap, because eventually everyone's going to realize what Tesla actually is. And by that stage, really, it's kind of going to be game over, I think. Sure, maybe the company's going to continue to do well. Maybe the stock will do well over time. But by the time that everybody gets the opportunity, it's kind of getting a little bit late, don't you think?
So look, our bull case is 527. To get there, I need him to sell about 5 or 6 million units a year by 2030. That's about double what we currently forecast. But to go higher than that, and frankly, investors we're talking to, they want to add a zero to this thing and think that Tesla can be the most valuable company in the world. And to do that, you ain't doing it with cars.
What is it? Oh, that's right. Duh.
You got to go to units times price. You got to go software as a service. You need full autonomy. And those are things we think investors need more evidence of, particularly on autonomy, where we think it's still massively overhyped. We need more evidence there for investors to be compensated.
The solving of fully autonomous driving is the key, and it is the big unknown relating to Tesla and everybody else attempting to solve the same problem. I've said this a million times, Tesla will win the race to solve autonomy. The big question is when. Now, I think personally we're very close. Others seem to be under the impression it could take a decade or two to get there. Let me know your thoughts in the comments below, guys. When do you think Tesla or somebody else will finally solve fully autonomous vehicles to the point where they're safer than human drivers? Let me know. 1 year, 2 years, 5 years, 10 years, a century, 10 millennia? Let me know.
He wants to go around the world. I'd follow his tail number. He's going to be talking to governments everywhere. And I think the pitch is, look, I got the smartest people in the world working on chemistry and solar and Internet of Cars. But for every 10, and I'm in position being a 400 billion gorilla now, I can spend big bucks. But for every 10 billion I spent, I need you spending 100. Let's do business together. I'll bring you jobs and a sustainable future, and you help let me set the hegemony. That's the pitch. It's happened before in other industries and other centuries, and he feels it's his time now.
This is a fascinating point from Jonas. Makes a whole lot of sense when you think about it. Cities the world over now, governments the world over, trying to transition their citizens to sustainable energy and transport. What better opportunity then for Tesla to go to these cities, to these governments and say, hey guys, we can bring jobs, we can build a plant, we can produce electric vehicles locally. How about this battery project? We can help you guys to reduce your energy costs, bring stability to the grid. Of course, you got to invest a bit as well. Everybody's going to win. This is a really interesting point that Jonas brought up.
It starts with autos, and that gets them the scale first to then be able to get the costs down and then the recycling infrastructure in place to then turn on the grids and do stationary storage, to turn on more affordable home storage and then these other alternative uses. But right now, the automotive battery pie is more than enough to move the needle. Maybe not enough for them to make their own vehicles. They would need to kind of sell the $15,000 or $20,000 powertrain skateboard, so to speak, to virtually every auto company in the world. That you need something like that to justify the price. But just again, we think this company may have arguably the largest TAM in the world at a time when investors are paying an enormous premium for innovation. I would challenge you to find a company that's innovating at a faster, more audacious rate than Elon Musk's company.
Challenge accepted. And immediately failed because there are none.
What we think's being ignored, though, is that the auto industry going forward is not going to be global, in our opinion. There'll be national champs. Tesla and other U.S. OEMs will have to find a solution outside of China because they won't be able to compete in the way they are today.
I don't really know what to say about this. Now, I cut a bunch of crap out of this video. Jonas talking about how in the future Chinese customers won't be allowed to use Teslas because Tesla's a US company, privacy, blah, 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 blah. Okay, cool. Maybe that's a scenario, but I just want to point something out. Just at this point in time, Tesla is dominating the Chinese EV market, taking an enormous outsized slice and growing capacity well past 1 million vehicles per year, just out of Shanghai pretty soon. So, I mean, really, do we really see out of nowhere suddenly from Tesla's insane growth in China, huge demand from Chinese consumers for their product, lots of support from the local government? Do we really see a point in the future where it's like, nope, sorry Tesla, nobody wants your cars now, no one's allowed to buy your cars now, sorry, but no. That's a bit of a stretch, dude.
You got to make room for the TerraCap companies like the Amazons and Apples who are also developing batteries and transportation that are the real competition, right? And then the reality that autonomy might be closer to 20 years away than 5. Those are some inconvenient truths that could change, but that's kind of where that's part of the beef we have with what's in the price right now.
Regular viewers of the channel will know I'm not one to bite my tongue, and this isn't any time to start now. I mean, this is one of the most incredibly stupid things that I've ever heard a Wall Street analyst say about Tesla or any other company's technology. I'm not here to rip on people personally. This isn't personal. I mean, I think Adam Jonas is a pretty switched on guy, but he's just so far off the mark here. This comment is a gigantic tell that nobody at Morgan Stanley who's analyzing Tesla has any fucking idea how deep learning, how machine learning works, how important data is, and how far ahead Tesla is. But who knows? I could be wrong. We'll just have to wait and see. as I've said in the past, the great thing is these videos aren't going anywhere, so you guys can hold me accountable.
Yeah, I mean, Tesla's in a position right now where most OEMs hope to be in 5 years where Tesla was 5 years ago. Roughly a 10-year lead. $25,000 car is important. Now, look, that might be the starting price. The average price would be $35,000, which is what we've expected their compact to be, which we don't expect to go into production until closer to mid-decade. Okay, maybe they're able to do a couple years earlier than that, but that's important in order to fill the kind of 3 terawatt hours of supply that they're talking about. If you assumed half of the 3 terawatt hour target by 2030 goes to cars and the other half is everything else, recycling, aftermarket, stationary storage, you name it. 1.5 terawatts, that's about 20 million cars. That's about 100% of our current EV forecast globally.
Morgan Stanley, what the fuck? Are you guys serious? You think by 2030 the global EV market per year in terms of volume is only going to be 20 million units? In 2030. No wonder Wall Street has no idea about Tesla. They don't get it. I mean, guys, go look back in history. Look at what disruptive technology does. Look at an S-curve adoption rate and think, holy Jesus. No wonder Wall Street's got no idea. If this is the thing, if they're seriously thinking in 10 years' time, the entire EV market's only going to be 20 million units, no wonder they've got no fucking idea. Jesus.
That's like 25% of all cars sold, maybe 30% of cars sold that year. It's just a massive number. We don't think they're going to get there, frankly, but even if they did half that, they're not going to do it selling $80,000, $100,000 cars. So you got to get the price point down to crack in to the households and to crack into the emerging markets.
Definitely a fair point. In either case, whether the global EV market in 2030 is only 20 million or whether it's more, it's in Tesla's best interest to continue to drive their costs down, and that $25,000 Tesla is a new lower starting price point aiming for 2023 for production, so it's not that far away.
You asked about the pandemic accelerating Tesla's lead. I think what it's done is it's taken the incumbents and took their sense of awareness and moved it into urgency. You're seeing how consumers deal with digital, and this idea, I think investors are thinking, why am I going to give capital to a company that doesn't have any software talent or really has second, third rate software talent?
Another marvelous point from Jonas here. As some of you guys will know, when graduating engineering students were surveyed and asked the employers they most want to work for, consistently for the last few years, it's been Tesla and SpaceX in number 1 or 2. Switch them around, the order changes sometimes, but it's always Elon Musk companies. And you need engineers to make new things, to make better things, and to make things better. So, who are you going to bet on? You're going to give your money to Ford, or GM, or Toyota, or Hyundai, or anybody else that doesn't have Tesla's engineering talent? No way! Unless you're insane. By the way, let me know in the comments below, do you guys own any legacy automaker stocks? I'm just curious, why do you still own them?
So Tesla's, areas of expertise, Internet of Cars, AI, ML, the vertical integration and the talent, that seems to be accelerating the market's appreciation of Tesla's position. And then it's, of course, what it's done to the cost of money and the cost of funds is enabling investors to think 20 years out. I regularly talk to investors that have 20, 30-year DCFs on Tesla. I used to take a lot of crap for having a 5 to 10-year DCF a few years ago. And then we've been swamped by investors that are thinking way beyond that now.
Isn't this a fascinating point from Jonas? Many of you guys will have heard me say in prior videos, there's no such thing as short-term investors. There's idiots who invest over the short term and think they're investors, but they're not. They're fools because they don't realize they're actually in the casino. Because of their short time horizon, they're introducing so much unnecessary risk. There's a second group who acknowledge they're in the casino, not investing. They're gamblers, but they know it. And the third group are the only form of investors. Those who do their homework, their due diligence, understand intimately what's going to impact this company over the next 5, 10, 15, 20 years, build out their investment thesis, buy an asset, and hold for the long term, which dramatically reduces execution risk, volatility, surprises, pandemics, and unexpected events, and allows you to take advantage of all of the upside over an extended period of time. I just want to give one example here. Imagine being the genius who invested in Amazon stock for 12 months, 24 months. They didn't have a plan, they didn't have a long-term vision, they sold in 2000 or 2003 or 2006, 8, 9, 10, 11, 12, 13, 14, 15. You get the point, right? Not having a long-term investment horizon can cause you to do incredibly moronic things like selling a stock that's still on day one. I mean, what are you going to do? Sell your stock? Pay tax, lose half of your profits, then reinvest that smaller amount into a company that's likely to do even better than the one you already researched and invested in and just sold because, oh, I'm a genius, I made some money, I better sell now. Who cares about a long-term vision or a plan or an understanding where this company's going to be in 10 plus years? Nah. I'm going to lock in my 100% profit today. Wait, I don't have anything else to buy and I have to pay tax. Wait, why am I selling again? Well, that's right, because I'm not very smart.
Does your $272 price target factor in the pullback from China?
Yeah, it does. We have China sales peaking middle of the decade and then going down and X growth by the year 2027 and then a steady decline and then eventually nothing after 2030.
Oh, Adam, no, dude, man. I was going to give you a B- for this until that clusterfuck of a joke. Come on, dude, really? Like, holy shit. Morgan Stanley is under the impression it's an inevitability that Tesla sales will be peaking mid-decade and declining to zero by the end of the decade. Why? Oh, that's right, because the Chinese government, tensions, privacy, data, you're not going to be allowed to have your Tesla in China anymore. No, that's definitely not going to happen. This is just insane. This is lunatical. What kind of obscure, ridiculous reach, who came up with this research, man? Like, name and shame. What the fuck? Hey everybody, I'm Morgan Stanley, and here's what I've researched. In 7 to 12 years' time, human beings are going to invent the warp core, and suddenly all cars, all planes, all helicopters, all boats, everything will be completely useless because we'll have warp drive and we'll just use some Star Trek shit to get everywhere on Earth and everywhere else because we'll no longer... Yeah, exactly. That's what my research indicates. Are you convinced? Yeah. I didn't think so. Hope you guys have found this video insightful. I certainly did. Jonas has been very honest and aware and realized that most of Wall Street have completely missed the mark on Tesla. They're scrambling. They're trying to understand how to analyze this stock. They've made some reasonable points, but it's still very clear to me that at least Morgan Stanley have absolutely no idea how quickly the EV adoption is going to take place, how quickly the world will transition to electric vehicles, how quickly the battery space is going to grow, how close we are to autonomy. They're so far off the mark on a few points, it's embarrassing. And Morgan Stanley now are one of the more aware analyst firms on Wall Street relating to Tesla stock. Many others are still completely asleep. This transitional period may be the last opportunity that I personally see for buying Tesla stock before everybody gets the story, and then it's like, well, what's the next opportunity? So pay attention. Sentiment, I think, is gradually changing. People's narrative around Tesla is gradually changing. We're not all the way there yet, but the tide is turning. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and Stake using the links below. Deposit $100 in your WeBull account and you'll get a free stock valued up to $1,600. And Stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.